All right, guys, it's that time of the month. It's time to talk small account challenge. We want to talk about the updates on the challenge, things we're learning, things we're doing right, doing wrong, all that good stuff, and some data that we're pulling out of it. Got a couple things I want to mention, a couple notes. We're sitting at 274 in the account. We added like $250 to the account recently just so we can start playing options that, in this situation, were more expensive, closer to the money. I had more time on them instead of playing, 0 data expirations, out of the monies. It just wasn't a great strategy in terms of that risk reward. Yeah, if you get it right, you can have a massive gainer. But if you didn't hit it right, which actually tends to happen more often than not, you bleed out massively and it's like, okay, like, do I really want to risk this much money? And I've said, nope, I'm good. I'll fund this thing up to $250, $300. It's a reasonable small account value. That's actually like where I started back. I want to say back in 2019, that's where I originally funded my account with. And so we'll start there and we're going to see how it plays out. And it's been a couple of weeks since that, and we've kind of just been treading water. But you already know that because we're treading water, there's still a lot of good to take away from this because, hey, we're not risking a ton of money here, right? We're risking a smaller amount of money so that if we do decide to take this strategy or take some of the strategies over to a larger accounts, then we're going to be just fine, right? We're going to at least have this data to go off of, and that's the goal going forward in the next couple of months. So let's dive into it. Here's IWM. Today's trade on IWM on the small account was actually taken a little bit too early. It was a loss. I'll kind of cover that in just 1 second, but here's the idea. This is the 1 minute chart, which I honestly don't really like to look at, but that might be changing going forward. And I saw building higher lows, and so I took a long position on IWM this morning, some point off one of those higher lows somewhere in here, and I was looking for a push up towards the VWAP, targeting up here and risking a new low of the day. We ended up getting that new low of the day, and I sold and took my loss on that. So it is what it is, it's not terribly it wasn't a huge loss. And then I also played one more smaller position on ARK, ARKK. I'll pull this one up right here to show you what I meant by that. This one I was looking to see it build a higher low over the past couple of days, which it had technically been doing this trend line. And I was buying for a dip right in here, but we never actually, we actually flushed below and then bounced back up later on. So the trade didn't end up actually working out on ARK. So I took the loss as we fell below. This 3770 line was my line in the sand. The higher volume node also, that's a volume point of control, and it was kind of an area of support 2 days ago. So that was where I gave it to, and we took the 2 small losses there. So we take a look at the dashboard here on TradeZella. I'll kind of explain this in a second. $40 in the red today. Yesterday was 14 in the green. 1 red and 1 green trade that came back and took us positive. The day before that was 54 in the green. The day before that was $15 in the red. So the good news here is that we've done a better job, or at least we've been doing a better job of at least having bigger winners and relatively smaller losers. And what I mean by that is too, our biggest problem was that we had like a $10 average winner and a $20 average loser, or like a $21 average loser, I think last time. You can go back and check it out. But now we've actually got this. This is overall over 81 trades. So it's going to take its time to get better, up to 1239, and this is coming down. I think it's going to get down below 20 soon, ideally. That's the goal. But if we look at the month of September, it's a lot more positive. I mean, look at this. Average winner and loser are pretty close together. The problem so far this month has been that we've been losing more than we've been winning. And I think I have some reasons as to why that we're going to unpack here in just 1 second. But let's dive through some more reports. This is actually really, really cool. So check this out. So this is the performance by price of the contracts, or stock, whatever you trade. So this is on TradeZella. It's not rolled out to everybody yet. They're currently in testing mode, and they're also, they're not fully, done. But I got access to it. It costs like 300 something bucks a year. So it's not a free thing or a cheap thing at all. And I had to pay for that. So, it depends upon, do you see value in it or not? And I think that I see value in this, a ton more value than what it's going to cost net at the end of the day. So our biggest concern, right, so far, our thought process has been validated, right, by playing these cheap contracts under $2, okay? Guess what? We've been terribly red, okay? And so far, not a huge sample size, but with 7 trades or so, roughly speaking, or at least this is in September only. Let's go back and let's look at the overall. Same thing. 7 trades in September only is when we started, which is actually like the past 2 weeks, 3 weeks, not even. We have seen now that we're green. So changing the options from super cheap out the monies to now in the monies or at the monies with an extra day of time has been helpful, and it's been green. So the good news here is that that's a cool positive that we're seeing inside of that. In terms of my setups, I haven't really had too clear so far. The supply zone or resistance short has been working better, but then again, we've been going down. So generally speaking across the market, so that's just net what's been working anyway. So I mean, that's kind of the trade that's working right now, but we need some more data to get a better view on this. But these are kind of my setups that I kind of log, and we can see if we can get more information off this. And the supply or the support, the demand or support zone long trade has not been working because we've been seeing more breakdowns of those zones in the current trend in the market. And so that's something to keep in mind going forward until that trend reverses, which will get us into some of the points I want to make. So when we go back to the dashboard here, do I really give a shit about the numbers right now? No, because it's not a meaningful amount of money that we're playing with, right? It's not a huge dollar amount. It's not like I'm paying rent or I'm paying bills with this money. It's not money that I'm pulling from or needing, right? So I don't really care about the number at the top left. What I care about is this profit factor, and I care about getting this average winner up and this average loser down. This average loser might actually not come down very much from 20 because now we're playing with a little bit larger contract size in terms of price. So the key is this average winner needs to be 20 plus. That's the goal, okay? Then in terms of win rate, we've been coming down the past couple of weeks, so that's concerning. But here's some reasons why, or some ways I think I can counteract that. First off, we're doing a good job, I think, at least in terms of when we're wrong and when we're right, to not really give a shit. It's like, it is what it is. The market is. One of the biggest things, and one of the biggest takeaways, I think it's been a recent shift, like a week or two ago, I've really started diving deeper into kind of some of Mark Douglas's trading psychology and learning a little more about the psychology, because as I was going through this, which is really cool to track your data, I found that as I went back through August, through July, and we started this thing in July, July was a good month, I guess. If you go back to the date range, right, and we check out July, it was a good month. So it was like, okay, like what was I doing in July that was different? And to be honest, as I go back, the setups were complete, like to be honest, like my thought on the setups, they were not nearly as good as the setups I'm taking now. I think the setups, the risk reward, the thought process going in, mapping that risk, and also taking the loss and taking the winner where I was targeting, right, before I got in the trade, I've been 10 times better with that as of late. The win rate's not as good. The win rate was so much better here. I was taking smaller wins and then fatter losses, right? And so what I'm realizing here is that, to be honest, it's a lot more random than you think. You can have the best setup. I look back at some of these setups. I'm like, I don't really even see it. I don't see it the way I saw it back then. So you can have the best setup, the best this, the best that. It doesn't really matter. All you need is an edge. You need a positive risk reward. I guess you don't need a positive risk reward. You can have, a 90% win rate with, a risk, 2 to make 1. You could do that. You just got to be right a lot more than you're wrong. So when it comes down to it, it's a lot more random than you might think and you might, really realize. And that just kind of plays into that trading psychology is actually a lot more important at the end of the day. So we've been sticking to those plans a lot better. And then it comes down to letting yourself get a big enough sample size, as we are doing. And the problem here is that we only get one trade a day. So, I would love to be able to trade 2-3 times a day if I see things that I like on the small account just to pull more data. But, sometimes I'll take a play on the larger account, which actually has been working out pretty well, which will lead me in some other points that I want to make. You jump back here, go back to the individual, the bigger account. And today I took an IWM trade and made 271, so almost $300 off an IWM, day trade in there, because of essentially the same setup that I was seeing that then developed later on in the day that I then took after I saw, oh, hey, this looks good. I'm going to risk versus here. I like this reversal spot, blah, 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 and let the trade play out. Took profits at my target, and that was it. So, you can kind of see how it will work out, right, bigger picture. But what I'm seeing is that I'm trying to trade this stuff a little early. So I don't like trading the first 15 minutes, but I'm trying to trade things a little early. So if I go back to IWM today, what happened? Yes, I was looking for a bounce. Why was I looking for a bounce? Well, I looked down here and we got a lot of support, a lot of bounce zones, the past couple of weeks, even back into June, July, around where we're at right now. And so I saw this chart And I said to myself, hey, if we start coming down into this area, which was an area of just support back here, resistance in there, resistance or turn support. I mean, we had a pretty key spot right here, right? So when we came down into that zone, I started to buy. I just bought a call. And I like the risk reward versus about 165 as my downside risk. And at that point in time, it lined up to be around low of the day. So this is why I bought. So I drew this zone in. It lined up with some of the price action, or at least where we were at the time. And then we ended up having, which is a loser. It is what it is, right? It started to build higher lows, looked okay, ended up being more of a bear flag. And then we broke the bear flag and headed lower. So in this case, the better trade would have been, hey, stop trying to guess the bounce, play the direction. The direction was down here, okay, until something tells you otherwise. And we did get a higher low, but again, a higher low doesn't necessarily mean much on a very, very short scale, especially it's only been about a half hour since the market's open. So letting things play out, I found that honestly, after about 30 minutes, after an hour into the market open, you'll generally see things seem to be cleaner. The moves seem to be cleaner for me. They're a little bit slower. They're not as choppy. And sometimes you get a better direction or a better reversal. And as we speak right now, you're kind of getting that, reversal set up, a little bit right here. We had one, late morning, and now we're getting this downtrend break right now, kind of a wedge break to the upside as we speak. So you're getting another one right now. And so things get a little bit cleaner, a little bit slower. You don't have to be like, oh my gosh, finger on the trigger, like, oh my gosh, you know what I mean? So that's useful and that's helpful, at least going forward. The next thing, right? So we talk about, playing against the trend, let the trend play out, try to play with the trend on the intraday. I haven't been looking at the 1 minute chart, but that's where I think it's a little bit more useful to just have a glance at the 1 minute chart just to get some more context of what the hell is happening today. Bigger picture, like, yes, I may have thought, okay, down here under 165 is a good spot for a bounce, right? Until proven otherwise. And so far it's working out again, but waiting for some sort of trigger, some sort of indication that, hey, we are bottoming and this is the time to actually buy the dip, bounce up, pull back, build a higher low, and then go from there. That's what you kind of want to see. So that's that. We talked about that. Mechanical trading, that's pretty much kind of comes into psychology. Hey, like this is it. Like if I map out a risk reward and just like this, I just been taking some paper trades as well just to try and practice a little bit more, just to like get more experience and get more reps is really what it is. And here was the paper trade. So I took one that was a loser, small loss. I took one as we pulled back right in here, and as we broke out over this downtrend. Okay, let me get rid of this white box here. Pulled up over that downtrend. Didn't pull out, we pulled up. Broke out over that downtrend. And then we ended up coming down, and I wanted to buy in here as long as we held this trend. And we did not. And so I stopped out as we broke back below. Okay, small loss, no big deal. Then I saw we built a higher low right here, okay, versus the low of the day. I'm like, hey, this is a really good risk reward. Hey, we break this downtrend. If this first breakout was a false breakout, and we break it again, it's a pretty notable trend throughout, multiple touches, 1, 2, 3, like 4 or 5 touches here on this trend line, this downtrend today. If we break this, it could have a nice move into the close, which as I'm filming right now, we're getting that. Now, still down 2.5% on the day, but hey, it was down like 3.5% at one point. So it's a pretty big move from where we just were. And like 30, 40 minutes ago, we held those lows, took a paper trade right there, got the breakout, took some profits on this way up, took some off at VWAP, and then just took the rest off seconds ago as we broke above VWAP, and that's it. Now, paper trade, who cares, right? But it's getting the reps. It's getting the reps and doing this. Because I haven't done this. There's some that I've dabbled here and there, but I've not actually sat down, tried to build out strategies, build out risk reward, and be much more methodical and mechanical about what the heck is happening instead of saying, I think this is going to happen. I'm going to buy some here. And if we go lower, I'll probably buy some more until we break below this and we break below that level. But you know what? Actually, sentiment's looking pretty bad, or this, it's good. You're wrong. Move the F on. Who gives a shit at the end of the day? It doesn't matter, right? Just because this setup is perfect, it's like a 10 out of 10 setup for you. It's an A+, as they say. Doesn't mean that this setup has to work, right? Doesn't mean that. And as long as you can accept that, like actually accept that and accept the fact that trading is a lot more random than you may think, you can put yourself on that plus side of consistently being profitable, or at least being consistent with your setups and your risk rewards and, net, your overall net portfolio gain. So that's what we're seeing right now. So we talked about that, fighting the trend, mechanical trading, 1 minute time frame. Now, again, if trading the reversals, waiting for more of a trigger, waiting for something to say, hey, like this is your go sign. You might be thinking, okay, we're coming down to support, we're coming up to resistance, but waiting a second or two longer, make sure it rejects, make sure it builds a higher low. Give yourself an additional reason to take that trade, because we've seen now in many times we can blow right through resistance, right through supports. And if you just had to wait for that trigger, you wouldn't have taken the trade. You wouldn't have wasted your time and wasted money on that. And then last but not least, market buys, market sells. Not something to do for individual stocks that aren't super, the spreads are a little bit wider, that don't have super tight spreads. But for IWM, for QQQ, for SPY, you can play market buy, market sell. And so you can have your finger on the trigger, have your phone if you trade on your phone and watch on your computer. I don't know, that's what I do sometimes. Or don't be afraid to use the active trade features on your brokerage platform. Hit the market buy, hit the market sell, just so that you can get out. The second it breaks below your level, get out. The second you're getting into your targets, get out or take some off, because I found that it does, at least today, especially this morning, was one where we broke down. And sometimes when you break down these levels, these are pretty, decent technical setups. Once we broke down here under that 165, we got a pretty big move down, and I probably lost a few extra bucks, or the contract lost a few extra cents than I needed to, because I had to adjust a limit order to get out. So just market sell out, and that's it. Not a huge deal if the spreads are tight enough. So not something I'm super worried about, but something to kind of think about and correct, or at least do better in the future. So that's the plan going forward. Yeah, well, we're kind of treading water and the accounts, kind of slowly bleeding out or just chopping around. I do think that we've got, a lot more data coming in. And we're getting somewhere, I think, in terms of what we're, figuring out from this. And so it's good. It's all good stuff. I'm not super focused on this P&L right now. I'm more so focused on the process, the strategy, getting the average winners higher, getting those average losers, keep them nice and small, and respecting, the plan essentially as you go in, and just seeing how that will play out over time. So that's the idea. That's the plan. Hopefully this video was helpful in some way. If you got something out of it, hit the thumbs up button. Consider subscribing if you're new. We're running this challenge. There's no time limits, none of that stuff. But if we take the account to, let's say, $500, $600, $700, $1,000, the goal is going to be played over on the larger account. And so that's what we're looking to move to at some point, and play with around 10K of an account size. And then any money additionally will funnel into the Robinhood for holding the stock positions and bigger picture investments and whatever you want to call that. And instead of trying to just simply guess across movements, because I don't like it. I've realized that, hey, sometimes you'll be right. You'll have big winners. Sometimes you'll have big losers. But realistically, I'm not a big fan anymore. It's what's the point of this stuff? Even when the markets are good and bad, guessing is not trading. It's just not. And it takes, losses upon losses to really realize that. But that's where we're at this point in time. So I'd much rather be more methodical, mechanical about my trading. Again, no emotions, no care in the world, because, hey, if I have long-term positions, do I give a crap if they go up tomorrow? No, I don't care. If they go down, I don't care. I literally don't care. All I want to be able to care about is what the heck is happening right now. Is there an opportunity? Can I take advantage of it? How do I play it? Trade my plan, and that's it. And if you have a system that works, you got a system that works, and you can print. That's the goal. So thanks so much for watching, guys. Thumbs up button. Consider subscribing again, like always. And hopefully it's a lot more relatable, because, again, we're starting from, a level that I think is a pretty relatable level. And we're not sitting here saying, oh, yeah, we're making 30K or 75K, on this and that. Someone who's done this for, years upon years upon years. And like most people, there's a massive gap between that level and the masses. And so hopefully we can kind of bridge that gap, at least for now. And as we can grow over time, we can all get there. So thanks so much, guys. I'll see you in the next one. Peace out.